and welcome to the Block Party Trading Daily Analysis, where we take a look at price predictions and general analysis around the market. Today we're going to be looking at the general crypto sentiment and money flow, which will include Bitcoin price, the crypto total market cap excluding BTC and Ethereum, the BTC dominance and USDT dominance, and finally the US dollar or DXY. We look at all this on the 6-hour time frame, and we may move around to the 1 hour and also 1 day time frame over time, but today it is on the 6-hour. As we will start off with the Bitcoin price, we are going to take a look at what is the general movement and significant moves. So we can see that we have this upward trend line of quite a long time, since the 10th of March actually, and we broke it on the 7th of May, 23rd, 2023. And right there, not only did we break this long-term trend line, but we also broke the 20 daily exponential moving average and also the 50 daily exponential moving averages. Two very strong support and resistance zones, which are always worth keeping an eye on, especially with Bitcoin. We have managed to retain the support at this 27,000 band of support, which has been pretty consistent so far. Although we have retested it and got rejected again by the 50 daily exponential moving average on yesterday's CPI data. Ultimately, I am feeling relatively bearish on Bitcoin, mainly because we have this untested weekly pivot right here. These things do get filled a hell of a lot of the time, and we have a very nice comfortable target in the 200 daily exponential moving average. So I do feel that we're not going to be holding this support for too much longer, but we do have PPI data being released today that could have and will have a significant impact on price, usually in terms of volatility, depending on how impactful the actual data is, but we'll see when it drops. For now though, just be wary of the price potentially dropping a little bit more, providing we follow this trajectory. Next up, we'll take a look at the crypto total market cap excluding BTC and Ethereum. We specifically look at this to exclude BTC and Ethereum because they hold such a dominance over the market, they will effectively skew what the alts are actually doing. And this is simply a case of, is the market cap for alts increasing or decreasing? As we can see at the moment, it's been in a relative downtrend. However, we are in a descending wedge at the moment. These things are actually quite a bullish indication, and we've got a few other bullish factors to indicate that we might be breaking out pretty soon. When I say pretty soon, we're looking at the mid to long term. We have a bullish divergence that has just popped up, and also the natural descending wedge right here. So I do think we're going to descend a little bit more to around about 340 billion, but then once we break out, it should be off to the races. Then we're going to move on to the dominance side of the market. First up, we have the Bitcoin dominance. This is relatively significant in that when it pumps, generally the market is dumping. Because Bitcoin is a much stronger store of value versus altcoins, people will be more inclined to keep their money in Bitcoin, but they'll be more inclined to sell out of altcoins due to general uncertainty. So generally when Bitcoin pumps, not always, but when Bitcoin pumps, Bitcoin dominance pumps, then the market is usually not in a very good state. However, we're seeing some finally pretty bullish factors popping up on the Bitcoin dominance chart, in that there is a bearish divergence appearing. So the price is kind of leveled off now at this 48.81%, and we can see that the oscillator on the CVD is starting to descend. Not only that, but we have started to break the 20 daily exponential moving average and also this significant longer term trend line. So I do think this is all lining up for a mid to long term breakout for Bitcoin soon. However, short term, I still see a fair bit of blood. And then onto the USDT dominance. It's always good to have this. Whilst it won't give you a significant idea of what is going to happen, it's always a nice little backup for all the rest of these charts, in that where is the actual money going? Is it staying on the exchanges, or is it leaving the exchanges? Is it moving into alts, or is it moving into Bitcoin, or is it moving into USDT? So what we generally see here is when USDT starts to increase, then it can be quite a good sign. Usually it is in tandem with the market dumping, because people are selling out of either BTC or altcoins and into a stable coin. This will happen in times of uncertainty and FUD and things like that. However, it's not always a bad thing, because a lot of the time it can also mean that money is coming onto the exchanges, getting ready for people to buy the dip. When it starts to decrease along with everything else, basically, then that's pretty bad news because it means that money is leaving the exchanges. That means that people don't even have trust in the exchanges. So it is worth keeping an eye on. But what we can tell from the technical analysis at the moment is we are inverse to the crypto total market cap in that that is a descending wedge. We are currently in a mid-term ascending wedge, which is also good news because we're at the very top of it and also got a bearish divergence. So we can expect a bit of a drop there. And this could indicate that money is going to start going into BTC and also altcoins at some point. So this is lining up quite nicely with an expected short-term dip in Bitcoin and people getting ready to buy with lots of USDT sidelined for the dip. So let's hope that that happens. And also as well on the USDT dominance, we have an untested weekly pivot just down here. And these things, like I said, get filled a lot of the time. Last but not least, the final piece to the puzzle, which is the Dixie or the US dollar. Now, whilst this is not a crypto asset, it does have a significant impact because when interest rates rise, then money goes into the dollar and vice versa. So when they drop, we will see naturally the US dollar drop, and then this money generally goes into stores of value such as gold, stocks, and also crypto. So what we really want to be seeing is the US dollar dropping. However, we are looking somewhat potentially indecisive on the dollar at the moment. We've tried to test and break out of this descending trend line a few times, although we are tracking on this 20 daily exponential moving average. Now, on such assets as the US dollar, moving averages are king. They do have so much impact on the market. So as you can see on this 20 daily exponential moving averages, every time it's being tested, it gets rejected. Even up to this point, it tries to break out and gets rejected again. So we've currently just broken it, and we're also trying to break this quite significant trend line as well. If we do break out of this, because we're in a symmetrical triangle right now, which is really indecisive in my opinion, then it does mean that we may see quite some blood in Bitcoin. Like I said, if we break out, money's going to the dollar, it's not going into Bitcoin. However, inversely, if we do break down, which is probably the more likely longer term impact, again, we have to see what PPI data will say later on, we could see a massive pump in Bitcoin and in also as well. And naturally, guys, as you know, Bitcoin is king. If Bitcoin pumps, then 95% of the market will pump as well. It's a trickle-down effect, so make sure you learn that and the way that it works. In that sentiment, always look at it like this. Bitcoin will pump, the large caps will pump, the mid caps will pump, then the shit coins will start to pump. It just works like that pretty much every time. Anyway, thank you very much for watching. Don't forget to like and subscribe and also follow our YouTube channel to get these videos as they come out. We post them hot off the press. And if you really do enjoy this content, then join up to our premium channels, which you can find all the links at blockpartytrading.com. Thanks for watching.